Very few of the Freddie and Fannie loans were of the subprime variety that caused the crisis. The area that I represent was a hotbed of subprime lending. There was a lot of fraud. The so-called liar loans were prevalent. I had realtors who were my friends. I used to be a realtor in my home area before I came to the state legislature. And they were calling me up, and they were giving me the first warnings about how bad this was in late 2007, early 2008. They had big concerns that there was loans being given to people that should never have them. But those were, for the most part, private lenders, like you say. Then they were selling off the assets. They were chopping them up. Mr. DeMarco told us yesterday that one of the big problems he has is he only owns certain tranches of those chopped up loans and can't control the assets. We told him he needed to get control. We needed to figure out how to get control. If he needed more legislation to do that, he needed to come back to Congress so that we could unwind this thing. It is my firm belief that we will not get the economy back on track until we take care of the housing crisis. Nearly 20% of the national economy is dependent on construction and housing. When you have that whole sector just flat on its back, you're going to have a tough time getting the economy back on track and moving again.
Here is what's called an inside view of the mortgage crisis from Charles Calaromas, who is a professor of finance at the Columbia Business School and a research associate at the National Bureau of Economic Research. It's half the page in the opinion section this morning of the Wall Street Journal. And he writes this: the turning point was the spring and summer of 2004. Fannie and Freddie had kept their exposure low to loans made with little or no documentation, no doc and low doc loans, owing to their internal risk management guidelines that limited such lending. In early 2004, however, senior management realized the only way to meet the political mandates they had been given was to massively cut underwriting standards. The risk managers complained, especially at Freddie Mac, as the emails to senior management show. They refused to endorse the move to no docs and battled unsuccessfully against the reduced underwriting standards from April to September 2004. He goes on to give details of this, saying that it came really from the top about getting more people into homes. Here's how he concludes. Taxpayer losses at Fannie and Freddie alone may exceed $300 billion. The costs of the financial collapse and recession brought on by the mortgage bust are immeasurably higher. Unfortunately, the Obama administration has perpetuated the low underwriting standards that gave us the crisis and encouraged the postponement of foreclosures by lending support to various states' efforts to sue originators for robo-signing violations.
Well, I totally disagree with the last part. In fact, it is very difficult to get a loan these days that is not backed and totally secured by in any way. The government is about the only people that are still in the loan market, and the private market has just about gone away in many parts of the country. I think I heard a statistic the last few weeks that in my area, 96% of the loans that are actually being made on homes in my area are made with Fannie and Freddie backing. Nobody else is in the market. With regard to what the article said about 2004 and the underwriting standards, I think there was an effort to try and get people into homes. But while I was in the real estate market prior to that, everybody had to qualify. There was a shift there for, I think the bondholders were pushing, or the people that were buying the bonds wanted them. There was the situation with the carry trade, and there was cheap money available, and there was a number of people that were pushing. It wasn't all about just trying to get people into homes. It was about financial institutions packaging these mortgages, selling them off, and making profits. And they were also pushing hard to get these. So I think you have to go below the surface. I think you have to not just blame one entity and really understand what happened here. And that's going to take a long time for the American people to get the right answers.
Next call for Congressman Dennis Cardoza of California. The Merced region is Elaine, a Democrat in Upper Marlboro, Maryland.
Yes, good morning.
Good morning.
Good morning, Elaine.
I'm calling actually about what you're talking about and the woman before you. I am a 53-year-old woman, and I raised my 2 children by myself. I bought a house that I could afford. I am now at the point where I'm going to pay my house off when I'm 58 years old because I didn't fall into all these traps of wanting a bigger, better home. And I keep hearing every time I'm listening to C-SPAN about this 55 magical age of Social Security being okay, I, as a woman who has done what my parents taught me, which is to buy what I can afford and nothing else, am a little upset about this because I want to know what my Social Security is going to do for me when I'm in a place where I don't have a mortgage payment because I've paid off my house, and I'm looking to that money to be part of my retirement so that my children, who are both, by the way, doing very well, have their own homes and are a CPA and a nuclear engineer because I raised them the right way. It's really just so upsetting to me because I see all these people buying homes that they can't afford. I see, and I put the blame there, and I put the blame with the people that are selling these homes because I was told that I could buy a home that was much more expensive than the one I bought, and I said, no, I can't. I know what my income is. I can't afford that. So I guess that's all I really want to ask about because I've listened to both of you this morning, and it just bothers me because I am a hardworking American that's done everything the right way.
Well, I applaud you for that. In fact, you and I are somewhat neighbors. I live in, my family back here in the East Coast lives in Lothian, Maryland. We also have a home in California. So I have homes on both coasts that are somewhat underwater based on what I purchased them on. The reality is that this crisis was caused by a bubble in the subprime loan market, but really what's happened now is it's affected everyone. Everyone's home prices have come down, or their equity in their homes have been reduced because of this unfortunate bubble. Now, I made the joke about that I have underwater mortgages. I really don't. I bought my house in California in 1992. My wife and I put significant investment into those homes, and we have equity in both of our homes. So we've sort of lived our life the way you have, but not everyone's been able to do that. I think the vast majority of Americans actually are trying to do the right thing and were raised like you and I are and trying to do the right thing. But there's enough that have not, that have either been encouraged to get into bad situations or have just fallen on bad luck, that have really come together and caused this crisis to precipitate. We know right now that there are 11 million at-risk mortgages in America. If you take 3.8 average family that lives in these units, we have over 40 million Americans that are living in situations where they're at risk or likely to be foreclosed on in the next few years. It's a serious, significant problem, and the contagion from those are going to affect all of us, not just the homes that are being affected directly.
We've been waiting for the numbers on the economy, and they are out. The AP story, the U.S. economy grew 2.5% in Q3 as consumers rebound, is the headline on this story. The U.S. economy grew modestly over the summer after nearly stalling in the first 6 months of the year, lifted by stronger consumer spending and greater business investment. The Commerce Department says the economy expanded at an annual rate of 2.5% in the July to September quarter, nearly double the 1.3% growth in the April to June quarter, and a vast improvement over the anemic 0.9% growth for the entire first half of the year. Any reaction?
Well, I'm glad that we're able to start digging out a little bit. I'm afraid that if we don't deal with some of this overhang on the housing market and the construction area, that we are not going to be able to pull ourselves out. The economy is one where certain areas of the country are doing well, and other areas of the country are not doing well, and in fact are still having declines. And what we have to try and figure out how to do is build confidence, put people back to work, and expand on these numbers. It's much better than the alternative, which would be for a decline. I think we still have a long way to go to get the economy in a place where we're really creating a significant amount of jobs and getting to where we want to be.
We also have the Thursday unemployment numbers. Christopher Rubager is the AP economics reporter. Despite recent declines, applications still stuck at above the 400,000 level where they've been for all but 2 weeks since March. The weekly applications for benefits declined 2,000 last week to a seasonally adjusted 402. And the 4-week average, less volatile measure, rose to 405,005. The average had fallen to a 6-month low just 2 weeks ago. We're talking to